Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, September the 18th, the year 2018. Let's talk trading. Wicks. I talk about wicks a lot. Talk about the wick zone. Yesterday, talk about scraping the wicks. So I thought maybe I'd get into the wicks just a little bit more, especially for those just tuning in and wondering what's all the hubbub about wicks. Well, first, you have to know that whether or not you're talking about wicks, you always, always, always have to have your money and risk management in place. Yeah, you hear this every day. Repetition, that's the mother of success. So we're talking about wicks. Well, looky here. Price has left the wick zone. So what is this wick? What does it mean? What does it indicate? Does it show anything? Well, you start out somewhere, price goes up, price goes down, price settles. So what happens here? This candle right here, we opened here, we went down to there, we came back through the open, we went all the way up to there, and then we came back down. Now, once again, before you start telling me, wait, that's not quite right. Yeah, I know this is a monthly candle or monthly chart, but forget about it. That's pretty much the way price moves. So in this case here, we open here, we go up, we reverse course, go down, and then we wind up here. So if you look at a 1 minute candle, that can do, sure, of course, it can go up and down across the open price a few times. But as far as we're concerned, that's what it does. And so what does it mean? If price starts here and goes down here, that means the sellers push the price down here. Buyers go, oh yeah, and then they push the price all the way up to here, and the sellers go, oh yeah, and then they push it right back down to here. So it's just basically a big game of push, right? So here we have the open price, and the buyers push the price up to here, and the sellers go, oh no, and they push the price all the way down to here, and the buyers go, oh, you think so? And then they push the price back to here. So basically, this is where the sellers, from here down to here, sellers were basically in control. From here to here, the buyers were in control. So right here, you can see sellers push down to here, buyers go, oh no. And so this is the buyers. So you can see here, the wicks are basically the pushback. In other words, the sellers push back or the buyers push back from the extreme. And so what happens is, you can see right here, when you, let's see, let me pick another one. Now we'll just pick the current candle here, current monthly candles. So you see here, the buyers had pushed back to here. And so what happened? We opened, sellers pushed back a little bit, buyers started to push back, came here, and it left the wick zone. And the buyers just kept pushing and pushing and pushing, entered this wick zone, and it pushed right up and through. Right now we're 22 pips over the previous month's high. So right now the buyers have shown their strength. They're flexing their muscles. Okay? So when you get in this wick zone, you basically find out who's stronger, buyers or sellers. And you look here in the weekly chart. Once again, we're in that wick zone. Who's stronger? Are the sellers going to go, oh no, or the buyers going to go, oh yeah? And you can see here, once again, we're 22 pips above last week's high. And they pushed up. See, but the sellers had pushed down 16 pips here. Well, it looks like the buyers might keep pushing a little bit further. But you can look over here now. You see here, these wicks, we're in this wick zone. So you've got some sellers up here that might want to start pushing back. So it's something to be aware of. that's when I said yesterday, kind of look over to the left and see if you're in these wick zones. You see all this clear air up here? And of course you can scrunch the chart down and to see what's going on. But you can see here, we're in these later wicks. So if this one breaks right here, then you have to move up to get into more wick zones. So that's what you kind of look for. And so like here at the bottom, you see, they put in this bottom and then the buyers push way back. And the sellers push down. And you see here, we didn't break that. And then they came back and you got a turn trade and so on and so forth, right? And on the daily, once again, we got into the upper wick zone. Who's going to win? Are the sellers going to push price out, or are the buyers going to push the price out of that wick zone? And the buyers push the price out, you can see, by 29 pips at the moment. And once again, we've got 1, 2, 3, 4, 5, 6, 7 pairs over 100 pips, with the euro yen clocking in at 120 versus the dollar yen clocking in at 72, which that's nothing to sneeze at. And the buy zone, you can see here, we opened, we hit the buy zone, and once again, using these wicks, you see it made a new high, higher high, but then the sellers started pushing back. So that was basically maybe a one pip or scratch trade right there. And here, on the other hand, you took that short. You see here, it made a lower low, but then it came back here, right here. You see, made a lower low, but it came back, scraped that. So right here, if you were short and waiting, there was your sign, your opportunity to take profit. Buy zone here, well, there you go. And you can see here the pivot was right near the open, so that really didn't have much to say. And you see a dip back into the buy zone, another dip back into the buy zone here. So if you were a experienced trader with the buy zone, you may have taken that trade even though it was a red hourly candle. You observed what was going on in the price. Rat zone, here we go. Opportunity. Right here, there's a turn trade at the top. You see right, that turn trade at the top? There you go. You have a turn trade there. Nice turn trade happening here. So you might want to look for that in the future. Once again, we took out the pivot. You see we hit close to the daily R2 and the weekly R1. So right here, you might look for a reversal. So we still have to take out that pivot, weekly pivot right here. And on the daily, we took out the pivot. We still have that 911 pivot that we need to take out. And the 822 pivot. So price may or may not revisit these areas. And there's still this 132.14 pivot to take out. And this one, the May and the April pivots that were missed. And once again, looking at price action trades, you see here, 2 ball at the bottom, green at the line, you go long, 1 ball at the top, red at the line, you go short. Now, yeah, these balls move. Somebody's talking about repaint. No, it's not a repaint. They just move in real time as price changes. 3 ball at the top, red at the line. Right here, there was a nice short opportunity to take 10 pips. If you're still riding the trade, that's okay. You never know what happened next. And right here, the previous daily session lines. Once again, candle color at the line, crossover trade. Very basic, very simple, yet profitable, right? Wick zone. Every day I say the same thing. Price doesn't like staying in the wick zone. So what happened? We went into the zone, out, into the zone, and out. Once again, that's the wicks. So right here we were in the upper wick zone. And that wick zone, remember, would be created by the sellers. And the buyers said, we are stronger. And the holo zone right there, you can see there's a nice holo trade short at the 131.40 area. And here, the open price, that was it. And the inventory reduction bars, you can see there was some shorts, just a couple of pips, not much. Here we had a long. There we had another long, but you see this? You see this? That's, you take that trade, but you have to be ready to bail, because, I mean, the long trigger, this was the first long trigger. This was coming kind of late to the game. And you see what happened. Here we're in a short opportunity to take that trade. Previous daily, weekly, monthly, open, high, low lines. Once again, you can see some confluence here. You just take the trade at the line. Simple crossover. Let the candle color of the H1 candle be your guide. And you can see in the tick chart right here, it's just pretty much horizontal, nothing much happening. And on the Einstein lines, you can see here opportunities on both sides. Now, funny thing is, you can crunch the chart, you see that there was a, even though this is where we started, if you look back, you can see what happened here. And so it kind of gives you a clue. Yeah, there was a bunch of sellers there. Buyers came back, and you can see here there's a lot of selling. So that's just looking at the chart, paying attention, and trading what you see. And so right here, if you got in a trade, any of these places right here, if you entered that trade, you can see it made that new high, but it didn't make a higher high. Then all of a sudden you see a turn trade. It's just like, okay, why not just take the 5 pips and be happy? Because you got to do it again. Maybe you only got 3 pips on that turn trade. And then you can see right here, there was a turn trade against you if you went short. And once again, you could have picked up 4 or 5 pips. So if you take these and you're making, 3 to 5 pips each time, over the course of what? An hour or two, you might make 5 trades between 3 and 5 pips, 15 to 25 pips. Not bad day's work. So traders, Wicks, I hope you learned something and you can apply it to your trading, because remember, it's not what you trade, it's how you trade it. So let us continue trading the banks.